Now, this last example we've got for you, this may be something you recognize from FAR. Yeah, I've included this in FAR, and I'm including it here in Audit. I think it's a solid example, and it's something that can prep you for both exams. Now, we've got PowerLogic. Sounds like a nice tech company. They are an SEC filer, and PowerLogic has a year-end balance sheet date of December 31st, year 5. PowerLogic plans to file its financial statements with the SEC by March 15th, year 6. Well, they say you plan and God laughs. I guess with the SEC, you can't really, you got to follow with that plan. You got to get it done. You got to make sure you file with those regulatory authorities. The following all happened after the year 5 balance sheet date. Oh, man, just why do things have to happen? This sounds exhausting. All right, first, upset customers. You got it. You hate to see it. Customers were upset with the quality of the company's products and sued the company in year 5. A judge ruled in favor of the customers during the subsequent event evaluation period. The result is that PowerLogic must pay $100,000 to the customers. Currently, they have a contingency amount of $250,000 on the balance sheet. Now, here's an interesting point, right? This amount is an amount that they already accrued for because, presumably in the past, the lawyer said, yeah, it's probably likely you're going to have to do this, so accrued $250,000. However, it looks like it's actually less. It looks like we actually have to pay less than what we accrued for, which is nice. Now, first off, are we going to accrue for this? How should these events be treated in the financial statements? So first off, do we record it? Do we disclose it? Or do we do nothing? And then we'll talk about numbers. So in this case, give you a second to think about it. Going once, going twice, going 3 times. And yes, we are going to record it because it actually affects our numbers. Because this was recorded on the balance sheet. Now we need to adjust our numbers to this number. So what are we going to do? We're just going to simply make a journal entry to reduce our contingency amount by $150,000 to get to $100,000. Very good, very good. I'm going to give an R for record. / recognize. R can stand for either. PowerLogic announced February 15th, year 6, plans to acquire Great Bend Inc. for $3 million. PowerLogic will acquire the company using a combination of debt and equity, planned for August 15th, year 8. Now, first, does this affect the year 5, which is the year under audit? It does not. However, this is pretty significant. I mean, the example we've used throughout, acquisitions, mergers, something like that. Yeah, sounds like a big deal. So I'm going to say we are going to think about it. Are we going to record it, disclose it, or do nothing? Going once, going twice, going 3 times, and we are going to disclose it. We're going to footnote it. Make sure that is announced. Now, this is kind of from the perspective of FAR, right? Of preparing the financial statements. But as an auditor, your job is to make sure that this accurately happens. So as you can see, this pretty much applies to audit and what you'd see on the exam as well. The company has an accounts receivable balance of $1 million at the end of year 5. On February 12th, year 6, a major company announces a bankruptcy and it will not be able to pay its vendors. We saw this one already. Going once, going twice. Want to make sure you got this down. What will this be? This is going to be recording. Now, this one affects the year under audit, and we are going to have to adjust our accounts receivable, make a nice little journal entry. Not going to go into the journal entries there. That's much more of a FAR topic. But we are just going to have a nice little bed that expense of $250,000, reducing our AR balance by $250,000 to $750,000. Lastly here, another customer that usually pays its invoices on time still had a good amount of invoices outstanding at year end. Unfortunately, the reason for the lack of payment was from a fire that burned down the customer's whole operation. As a result, the customer has shuttered its doors permanently and has ceased all communication. Ooh, sounds like a rug pull there. Not good at all. So although the customer's receivable balance may be past due, is this going to be recognized or not? And I'm going to say this is a non-recognized subsequent event for 2 reasons. First, there's no evidence at the year end that the customer, who has always been a timely payer, was not going to pay the past due invoices. And secondly, this fire, this disaster, and decision to close the shop didn't occur until after year end. So if this is considered material, this would be a required disclosure, but no adjustment is needed because the adjustments would happen in the next year. So I'm going to put a disclosure here. Awesome, awesome. Nice little example. Always nice to get practice. Always great to hear my voice, right? That being said, let's wrap this up with a little summary of our subsequent events. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.